Okay, thank you, David, and hello, everyone. Good to be back at the Red Cloud Conference to present to you guys again. As David mentioned, we are a Western Australian gold producer that's going to be expanding production, currently expanding production over the next couple of years, and happy to walk you through the presentation today. Standard forward-looking statements, read them at your leisure. And we'll jump into some of the highlights for Karora. So we are located in Western Australia. We actually have the largest covering of the Zaluka Shear, or the Kalgoorlie Trend as it's better known, in Western Australia, just south of the Super Pit. You'll see a map showing that in a few seconds here. But in a Tier 1 jurisdiction, great place to mine, very low risk, great permitting and environment, great place to buy new assets as we've been doing over the last several years. So really happy to be there. We do have a growth plan that's been taking us, that is taking us from about 100,000 ounces 2 years ago. We did 133,000 ounces last year. We're doing north of 150 this year and stepping up towards 200,000 ounces over the next couple of years here. And as I mentioned, a growing gold production, but we also have a growing nickel production profile. We're one of the only companies in the world, and Beta Hunt's probably one of the only assets in the world that has primary gold and nickel immediately adjacent to each other. And I'll tell you why and a little bit of the history of the operation as we get into those slides. A team that's done it before, we'll highlight some of those individuals, and then we do take the whole carbon neutrality thing pretty seriously. We've been pioneers in that space. We'll touch on that briefly as well. In 2021, we were announced as the first carbon neutral junior gold producer. This year, we did that last year as well, and this year we're going to be working on some emissions reduction initiatives across the asset base, which should maintain our status as peer leaders there. Has led to additional investment, which has been fantastic for us and given us kudos across the industry. There's the map I was talking about on the right-hand side. So lots of you will certainly be aware of the KCGHM Super Pit. About 100 million ounces has come out of that page that you're looking at right now. Our primary assets are the Beta Hunt mine, which I'm going to spend about 90% of my time talking about today, and the Higginsville Central mines and the Spargos mine, which we tucked in 2020. You see in the light shaded green, I don't know how well it's showing up on those screens there, the Karora tenements, which are 1,900 square kilometers. That is the largest coverage of that primary shear zone that hosts all of those large deposits. So the Golden Mile area, 60 million ounces. Goldfield St. Ives, which is right next door to us, right across the fence, 14 million ounces. Norseman to the south, 6 million ounces. We own the most land on the shear that hosts all of those deposits, even more than Goldfields themselves. So great place to be, not only from a growing production standpoint, but from an exploration standpoint as well. We have two milling centers, the Higginsville Mill, 1.6 million tons per annum, and then just at the top of the page there, located even closer to our Beta Hunt mine, is the Lakewood Mill, which we acquired in April of last year and was a huge success for us in terms of de-risking our growth plan that we had laid out to the market. So two milling centers, three sort of mines feeding them, Beta Hunt being the biggest one. This is one slide where we do highlight that transaction. It was a 1 million ton per annum mill. Now, why would we go out and acquire the mill when in mid-2021, when we laid out our growth plan, we talked about expanding that Higginsville mill that's located in the center of the page? Probably no surprise to anyone here, as we went out for tender for a lot of our parts, the original CapEx quotes had increased dramatically from 2021 numbers. And I'll just give you a rough sense here. It was about $60 million initially to expand the Higginsville mill. That increased to about $100 million by the time we'd circled back with all of the contractors. So huge inflationary pressures across the board, but we had a backup plan prepared for that eventuality, and that was to acquire a nearby producing or fully functioning mill. We did that in April of last year. We bought that 1 million tons per annum for less than the cost of that expansion would be. It was an $80 million purchase price, Australian dollars. We had a $69 million Canadian bought deal that was very successful to finance that. Reason for that, of course, being that it was de-risking something where we saw a lot of other projects around the world really struggling with CapEx increases. So really important acquisition for us. We got the keys in August. I'm going to show you the impact on our production chart here, but basically got that additional 1 million tons per annum 1 year ahead of our original schedule, which we've been reaping the benefits of since we took over. Here's a production chart I was talking about. It starts in mid-2019 when we acquired the Higginsville mine and mills. I'm not going to go that far back in history, but what you see there is steadily delivering production quarter after quarter after quarter, 25,000 ounces. But as you get towards the right-hand side of the graph, obviously you see those numbers start to come up. And we did just under 40,000 ounces in the fourth quarter of last year, which netted us 134,000 ounces in 2022, beating, towards the top end of our guidance with respect to production. You also see those all-in sustaining costs coming down. So something that we've been focused on since we took over the company was attacking that cost line. So you see that orange line trending down and to the right, except for one very notable, what I call blip in the radar, and that is highlighted at the bottom there. In March of last year, it was the first time that Western Australia had opened up its borders to the world and the rest of Australia in 627 days. So what did that bring with it? Of course, the first wave of COVID. It impacted us to the tune of $300 an ounce. So that's why you see AISC go up for that one quarter. But importantly, you see us tackle those in the next 2 quarters. We'll be putting out our full year financial results, including production, of course, here in about 3 weeks, and you'll continue to see good cost performance. So high margin producer expanding that gold production. In terms of where we're going, there's several milestones that we show on this page right here. I mentioned at the beginning of the presentation, we're expanding to that 200,000 ounce a year mark over the next couple of years, also expanding nickel production. But one of the key factors, we actually just press released an update on it this morning, that's getting us there is the addition of a second decline at Beta Hunt, and we'll take a look at that here in a second. But we have, for all intents and purposes, completed that second decline and are currently working on ventilation. We also recently announced major increases in resources and reserves. Resources increased right across the board. Reserves did as well. For context here, since 2019, this asset base has grown from about 400,000 ounces in resource to well north of 2.5 million in total. So it's getting larger and larger very, very rapidly, which has been fantastic, and a reflection of us removing some very onerous royalties that had burdened these two asset bases for a very long period of time. We did that back in 2020. We also have a large nickel resource. You see 33,000 nickel tons or 32,000 nickel tons there at the bottom at 2.7%. For context, in its history, Beta Hunt produced 66,000 nickel tons, so we have half of what was historically produced there in 40 years already, and we'll talk about that just at the end. Here's how we're getting from that roughly 100,000 ounces to 200,000 ounces over the next couple of years, primarily driven by Beta Hunt. We are adding a second decline at Beta Hunt, and what we've been done with the first decline is operating very steadily at 1 to actually just over 1 million tons per annum. We're effectively copying and pasting that productivity and that throughput rate with the addition of this second decline, which we announced this morning is actually completed in terms of the development ahead of schedule, and believe it or not, even a bit below budget, which has been fantastic. Over the course of 2023, we are adding 3 ventilation raises in there. The first one is complete. Second 2 will happen over the next several quarters here. And at the end of 2023, we'll be able to start doing the additional stope development work to ramp up that throughput rate towards 2 million tons per annum over the course of 2024. So in a really strong position, doing what we've done already for the last 3 years, and you saw that in the production chart, and it's all performing very, very well. In fact, it says 100,000 tons on this page right here. We've had some months that are over 110,000 tons per month. So you do the math there, and you see where Beta Hunt can go. It's a large bulk tonnage operation that's performing very, very well. In terms of resource growth, so I mentioned over 500% in resource growth over the last several years. Where has it come from? It's come from what you see on this page right here. This is a plan view here showing all those gold areas that you see are these very large vertical gold shear zones that we currently mine. We're mining Western Flanks and A Zone predominantly right now. Western Flanks can range up to 30 meters wide in terms of our stopes. So very, very large stopes. We've added no fewer than 9 new shear zones. So that's where those ounce additions are coming from. Very continuous vertical shear zones. They continue until you hit one of those major faults. You see 2 shown on this page here, the Alpha Island Fault and the Gamma Fault. Why is that important? Particularly south of the Gamma Fault is where it's all virgin territory. We are drilling that right now. We've discovered a lot of nickel down there as well as gold. But another key factor at Beta Hunt that's a large contributor, sorry, I'm going to go back to the slide for 1 second, is the fact that we actually have over 400 kilometers of underground development already in place. Now, how is that possible? I alluded to it a little bit earlier. It was a nickel mine for the better part of 40 years. All the development was put in place to mine the nickel. We've been using that to expand and mine the gold. Karora is the first company to ever own both the gold and the nickel rights at Beta Hunt, which is why the gold was left for so long at Beta Hunt. They didn't have the rights to mine it. We now own both those rights and are mining gold and pivoting back into nickel given where things are. I'm going to show you the relationship between gold and nickel because it's very important at Beta Hunt to understand how we can use the same infrastructure to mine both areas. So on the right-hand side, we've had this cross-section in the presentation for over a year and a half for a very good reason. That's an area called the Larkin Zone, one of our new gold shear zones that we discovered. When we wound back a major royalty at Beta Hunt in the latter part of 2020, we went right through all the existing underground development. You see that crosscut that's shown there along the bottom there, and we washed all the walls. We found what we thought was another shear zone, sampled the wall, found 14 meters of 5 grams per ton. Looked really good. Put a drill there, drilled through the back, hit that gold shear zone shown in red, but continued until we hit the contact between that purple area and the green area, which is the ultramafic that hosts the nickel, and the green is the basalt that hosts the gold. Now, if you can see the scale there, apologies, it's a little small on the bottom right-hand side, they're within about 10 meters of each other, and they're discrete zones. There is no commingling. So we go in, we mine the gold, 5 to 10 meters next to it, we mine the nickel. Great ground conditions. That underground development was in place for 25 years. No ground support required. We open stope, no backfill required, which is how we generate such high margins at these grades. So just a really good example to show you how close these two units are. Now, the obvious next question to ask about the nickel is how do you process it? We've been shipping that nickel about 400 kilometers to the north to BHP's Leinster concentrator. In June of last year, they restarted their Kambalda concentrator, which is just 4 kilometers down the road. We do not have to build a nickel concentrating facility. BHP buys the ore right from surface. We take it up the decline. They buy it in 3,000-ton lots, and they process it and pay us for the metal content. So really good relationship and really good for us from a byproduct credit perspective. So I mentioned the 33,000 nickel tons. This is a breakdown of where it sits, but let's get to the bottom line here. It's 2.8, 2.7% massive sulfide nickel, which is a great place to be. And we put out a PEA on the nickel in August of last year. Now, I promise you the numbers on this page are right. If I draw your attention to the third bullet point, the initial capital investment to bring on that production profile is just $7 million Australian. How is that possible? You can probably guess. All of the infrastructure is in place. We're going 5 meters left instead of 5 meters right to mine the nickel instead of the gold. So we can bring that on for an extremely low amount of capital. We're actually doing some remnant mining right now. We get about $35 an ounce in byproduct credits from the remnant mining in older areas of the mine. But this is virgin territory. Once we get that additional ventilation in place at the end of this year, we'll be able to go in there and develop some of these areas and really ramp up that nickel over the course of 24 and 25. It'll bring us to around 2,000 nickel tons or contained metal per year, which can drive all-in sustaining costs, byproduct credits, well north of $100 an ounce. So excited to get there, and certainly a very unique setup having gold and nickel next to each other like that. How much bigger can the nickel get? So this is one of my favorite slides. If I could point on the page, it would make this a lot easier. But if you look at the plan view on the left-hand side there, so I mentioned a really important fault called the Gamma Fault. So you can see the Gamma Fault is this dotted line on the right-hand side of the page in the left section there. South of that Gamma Island Fault, they never intercepted or could never find the nickel that had been mined to the left side of that fault for 40 years. So all those red dots is where the nickel was historically mined. Why couldn't they find it? Well, basically, to cut a long story short, the block had moved up by about 80 meters. So when they drilled through it and they hit nothing, they thought that there was no more nickel there, but they had a very interesting surface drill hole that was 1.2 kilometers away that was 10 meters of 11% nickel. We drifted through that fault, drilled a whole bunch of upper holes, and we hit the massive sulfide nickel in all 25 of the holes. Our discovery hole, as we like to call it at Karora, was 4.6 meters of 11% nickel. So we knew we'd found the continuation of those historical zones on the other side of Gamma. Fast forward through to today, that 32,000 nickel ton resource I mentioned is in those 2 green boxes. South of the Gamma fault, we've gone about 800 meters of strike length. 400 meters away is that 10 meters of 11% nickel, pretty good indication that the nickel continues. And then we've got another 1.8 kilometers or 2.6 kilometers of total strike length to our property boundary. So 32,000 nickel tons in resource today. We're going to be updating that next week, by the way. Can this get a lot bigger? The potential is certainly there. What we need to do is continue to drill. We will be doing that predominantly next year, get that additional ventilation underground, more equipment, more people, more drills, and we'll be attacking the nickel more next year. But that initial PA was a 7-year mine life, which is a great place for us to start. But the nickel story is really just getting started at Beta Hunt. And here's a number that's pretty impressive, I think. At current spot nickel prices, there's $1.3 billion worth of nickel in resource at Beta Hunt today that you can start mining for $7 million. Very little value for that in our stock as it stands right now, but that's about just under 2x our market cap right now today in nickel, and that's all the gold for free. So very, very interesting for sure. Higginsville, I see that, the timer is starting to tick down here. Higginsville, I'll touch on briefly. Higginsville was absolutely crucial for us over the first 3 years of taking over this company to get us to where we are today. It was a significant ounce contributor, a series of open pits and undergrounds, still contributing ounces today for sure, but as Beta Hunt ramps up north of that 2 million ton per annum mark, it's eating up more of our processing capacity. So Beta Hunt really is 95% of the story, but we certainly have a great resource endowment at Higginsville, particularly down to the south. Mount Henry's got over 1 million ounces at around 1.4 grams, but that won't be replacing any of the ounces that are coming out of Beta Hunt into our mills. In terms of where we can re-rate, everybody's got an opinion on this, of course, but we're trending towards that 200,000 ounce a year mark plus nickel. Certainly lots of movement left to come, and I'll probably just finish on this slide right here. Great coverage coverage from the analysts. David does a great job for us. Great shareholders. It's been a fun ride over the last several years in terms of stock price performance as well. And I think I'll probably leave it there. Give some time for some questions and